What's going on, everybody? I have a strategy that I want to show my new traders out there to help give themselves a trading edge and another tool in their option trading belt to make sure that they can become a successful trader. So today we're going to talk about what an iron condor is. So an iron condor is an option trading strategy that involves simultaneously selling both a bear call spread and a bull put spread in the same underlying asset with the same expiration date. What I mean by that is, we've talked about collecting theta in other videos and how you can sell puts to collect theta and also be right on a direction. Well, we can use an iron condor by actually adding the inverse of that, which is selling a call spread. Therefore, we think that the stock's going to stick between a certain range. So what we're going to do during this video is we're going to use TradeUI to find a potential stock. We're going to look at it on the chart with Thinkorswim. And then we're going to use TastyWorks to see what the Iron Condor setup looks like and just show you in detail how you can profit as a trader by collecting theta from both sides of the trade. So stick with me and let's get started. So I'm going to go ahead and be on TradeUI right here. If you want to check out TradeUI for yourself, there's a link in the description below. It'll take you right to TradeUI. There's a trial you can try out to see all the option data that comes in for that trading day and all the other trading days in the past. So I'm just going to pick a random stock here. I'm going to go with something that's probably in the purple, just because purple tells me that there's a lot of buying and selling going on, so people are kind of indecisive on what direction it's going to go. And Iron Condor, this is great for us because we want the stock to stay in a certain range, not necessarily just follow one direction. So I'm going to go with CVX. Let's see what CVX is going on here. All right, so CVX, I see a lot of calls, see a lot of puts. The calls are pretty on the short term. The puts, there's a couple of shorter term puts. Got 103 right here. So let's check it out and see how it looks. You know, it may not be right, but we'll see. All right, CVX. Okay, yeah, we can work with this. So CVX, you can see that they have a support line right here on the 160, and they have a resistance line right here on the 180. So I'm going to draw that line for us real quick, just so it's easy for everybody to see. Let's see, price line right here. What's that, 180, right? Yeah. Uh-oh, let's see here, and here. There we go. And here, and here. Is it gonna? There it is. All right. Takes a little time sometimes, guys. There it is. All right. So basically what's going on is this is the zone that CVX is currently trading in. So this is a good zone to look at for potential Iron Condor setups. It crashed really hard right here, found strong support on the 160. However, we don't know how soon it's going to go over 180, but it looks like it takes it about a month or so to actually make a move in the $20 direction. So we can expect it to take another month at the minimum to make a move up to 180. So let's look at TastyWorks to see what we have here. Let's see. So CVX, right? CVX, and what it is when you sign up over here, and then we're gonna set our expiration. Well, we got to pick strategy first. So we're gonna go to Iron Condor right here, and then we're gonna do a normal Iron Condor. So what happens is we have a put spread right here, a short put spread, and we have a call spread right here. That way, this zone right here that's identified in the green area, that's the band we want the price to stay in to collect that theta and collect all that time decay that we have. So what we can do with this, we can play around with the legs to really manipulate it how we want. Let's go ahead and try for 30 days. Let's see, it's 32 days right here. So let's move our call legs up to that 180 mark, and we want to try to get as close to that 180 as we can. We'll be a little conservative, be a little bit above 180. And then we said 160, so let's put our put leg right here around 160. Maybe we can get away with doing this. That's a little too much. So right here, we're a little more conservative for this play right here because we're below 160 or above 180, but sometimes it's better to be conservative. So you can already see we have a probability of profit of 61% just to hold this trade all the way through. And if we look you have to have $352 for this trade to take place, but maximum profit you would have is $148 on this play. So this is one of those, if you expect the actual stock to stick between these two zones, which we do, what happens is you can actually double the rate of if you're a theta collector, you will double the rate at which you collect theta as this option contract gets closer and closer to zero. So what happens is it will move around through here and it'll kind of figure out Maybe a week later you collected, besides, well, in this case, besides collecting $2 a day, besides collecting $1 a day, you would have been collecting $2 a day. But let's go ahead and just look at a put leg just so I can show you exactly what we're talking about here. So short put, I think we said roughly like 160. I think it's this one right here, expiration 32. All right, buy the 155, sell the 160. All right, so as you can see, now we only have a theta rate of 1.05. So besides collecting $1 a day, if you go back to that Iron Condor setup, now what we can do is the same setup here, but it's going to be for 32 days. And I think it was here, right here. Now besides collecting $1 a day, now we're already starting to collect $2.40 a day. So now you can see how it actually doubles the rate at which you collect theta, and therefore it gives you a higher probability of collecting money sooner than it would be on just a short put spread. Because even if the stock moves closer to that 180 level, we're still going to collect just as much theta, actually twice as much theta, as it would have just running a short put. So you can combine this with other factors such as high implied volatility, low implied volatility, and you can see how that will affect the contracts itself. However, at the end of the day, guys, there's hundreds of different strategies you can do as a trader. I just wanted to show y'all a new one called the Iron Condor and just give you a good idea that you can learn. Once you learn that a stock moves in certain very conservative zones, you can really capitalize on that and collect time and put it in your wallet, because at the end of the day, time is the most valuable resource we will ever have. And if we can collect time decay, that means that we give ourselves a trading edge, and we always make sure that we use the right tools to make sure we have that edge. Guys, I hope you have a great day. We're going to end the video here.